we had a Fed day today. I have a lot of notes from that. I'm going to go quickly through that. I'm going to talk about some of the major market indices, and then I'll do some of the requested stocks. For the purposes of this video, since it's a take two, I'm going to just go with the ones from the last time. Basically, the Fed came out with a fairly dovish statement. Yellen, I'm going to run through it. Basically, they talked about a moderate economic expansion, high levels of consumer sentiment, and income gains. You'd never know that because the where's the wage growth? They talked about business investment firming, which is kind of the first time in a long time, right? That's been something very stubborn that they've been mentioning, and in past Fed meetings, and now it seems to be picking up. They basically have employment as a constant here at 4.5% from now until, I guess, infinity. They want jobs to improve, although that's a little bit of a doublespeak, but the Fed is kind of like the kings of that. They talk about inflation being up a little bit based on energy prices. I don't know if Janet Yellen and co. has taken a look at what's been happening with oil prices, but they've been down recently. No mention of that. They talk about core inflation being stable. And then this to me was the lunacy. I gave the quote, the Ultimate Warrior, the old WWF quote. It's hard to ride the fine line between lunacy and being a maniac. And they're talking about hiking interest rates now to avoid having to hike too fast later. That to me is total garbage, because the true problem is not necessarily rate hike to cool down inflation. Inflation's easy; it's cured with rate hikes. The problem is when you have deflation and the vicious cycle, and you have to go through QE and all this the spinning plates, all this magic to reverse the cycle. So that to me is just tomfoolery. What I would have preferred her to say is just to state the obvious, that we're no longer in an emergency condition and it no longer warrants emergency rates. Don't worry, we're not going to hike too much. We're going to cap it off at 3%. They talk about the neutral rate being only about 3%, and it wouldn't take a lot of hikes to get there. They talk about gradual rate hikes and the predictability of rate hikes. When I hear that, it seems to me that they know the market only wants them to hike when there's a press conference, so they will oblige. So from now on, when you hear gradual, it means press conference, in my view. And that they're going to do a series of hike over the next couple of years, but it won't be that much. They talk about like I said, the neutral rate remaining low, and then they talk about the economic data being the variable here to determine if they do hikes or not. And they haven't factored in any of the Trump policies, apparently, into this to determine if they, if we're going to see that. So that is kind of a variable that they leave open. They talk about the path to rate hikes hasn't changed. And if you look at some of their forecasts, they're only seeing they only see the forecast being about 2% for the next 2 years, 2.1%. You could tell their staff members cook this stuff up. That's just how the Fed be rolling. And 2019 is 1.9%, and the long run is 1.8%. So when I start hearing weak GDP growth like that, I immediately have my lower for longer ears up. They hold employment, like I said, as a constant. Again, sounds very staffy to me. Inflation, they don't see even reaching 2% for the next couple of years, and they basically see 2% forever. And the FOMC forecast, only in 2019 was it bumped up a smidgen to 3%. So they expect to be fully normalized, I guess, by 2019, so over the next couple of years. I don't exactly see that as being very hawkish. It's, if anything, very dovish, and the market, I believe, interpreted that correctly. Like I said in the prior video, the path, it seems to me like they're kind of upper bound, that's their kind of their wish list if they have their druthers, and they're not going to violate that. That being said, that's the Fed. That's what I see with regard to the Fed. I don't see them getting too aggressive with the rate hikes. Someone just asked, will I be taking questions? So I did a prior video that was that I had issues with. It wound up being deleted, and I can't redo it. That's why I'm doing this video again. So I'm gonna just do the symbols from the last one. If there's anything that I miss at the end, if we have some time, I might do that. But I think that the ones that we covered in the last video were pretty good, and I suspect that they'll be what people want to hear again this time. Anyhow, let's get through it. So you had the markets up today. A lot of people were asking, where do I think things are going? And my answer to that is, why guess? We have a Fed day range now to play against. The extremes of that range, and if you want to jot this down, I had tweeted it out earlier. In the ES, the high of day was 2387.75, the low of day was 2365.75, and the VWAP is 2375.89. In SPY, the high of day was 239.44, low of day was 237.29, and VWAP was 238.49. In the intraday, for some reason on the daily, it's showing 53, so roughly about 238.5. So what I do with Fed day ranges, like I do with earnings day ranges, is I take that entire day as sort of my signal. Above it is bullish, below it is bearish, and in between is just in between. It's sort of no man's land. If you want to have some type of a bias, I guess you could use the intraday VWAP as your demarcation point, which also happens to coincide roughly with around where the pullback low was. The pullback low was 2375 quarter, and VWAP, like I said, was 2375.89. So roughly around there should hold if you're super short term and you want to have a bias there. Anyhow, today's auction, and when I say auction, I mean the day's trade, we did have some excess on the high today. I don't necessarily know if that's going to be meaningful excess, but I will say that there were not poor highs today. With regard to SPY, and let's flip into just SPY mode, when I talk about the kind of the violence of a move, meaning, did we have a multi-day consolidation and did it break down hard or did it break up hard? The violence in the move today was to the upside, and that's hard to not pay attention to. You basically had 8 days and almost part of 9 days taken back of consolidation and selling. Anyone who's short is now wrong in those days. So what I would say is that if we could hold roughly today's range, the path of least resistance should be higher. If you get below it, to me, then you would be saying that maybe we had a lower high and we could rotate back down. That being said, a couple of things that I took note of price-wise. One was that I've drawn two channels in my weekend review videos. One is the bigger consolidation funnel, and two is now this kind of breakout channel that has taken us higher. And we stopped just below the high of that channel. We could ride the channel higher. What I want to do, though, is just kind of wait and see how we handle today's move. Are we going to take out today's high and keep going? Are we going to languish in today's range for a couple of days and then go? Are we going to languish in today's range and then break lower? Or are we going to just break lower? So those are the scenarios that I want to see. Either way, I want to play against today's range, meaning long over the high, short below the low, in between. It's sort of just a coin toss. So let's go into the other Fed day range things that I've been talking about. One particular were the bonds. I've said for a while that at or near Fed day decisions tends to be the low of the move, and that played out again. You had a look below range on the 313, and now we're trapped within that 12-14 Fed day range. So I'm going to just keep it simple. That happens to also be roughly the 20 MA. If you want to play long bonds, I guess you can just use today's low as the stop, and then above the high as a long point, and I'd probably be looking for at least a 50 MA touch, which is also the backside of kind of the old consolidation trend. I had said yesterday in a quite prescient, I've said a couple of quite prescient calls. One was the oil I thought was bottoming yesterday. I said I thought we'd see a bounce. And I had said that we were into that 61.8 fib of the range. And I said that I thought that the kind of the outsized move lower was to channel low in the 45s. It wound up, and I said that we could have a potential secure low play. And that is playing out at the moment. We're above that high of day. So anything in my view above 48.79 to me is a long, and I like the idea now that this is the third attempt we've had in like in the cycles. It's gotten below the 200 MA and proven to be unsustainable at that point. I think you can play, you could change your levels now and use today's range as your guide. So long above the 49.04, in between is, it's just chop, and then below 48.16 to me might get a little bit iffy. The other one, and I was talking about, was this HYG. I know a lot of people think that the bull market is over, and that we've had 7 plentiful years, so we have to have 7 crappy years. But bull markets or bear markets don't die of old age. They die on recessions, particularly obviously bull markets, and bear markets are fueled by recessions. We don't have a recession. The reason why, if you remember back when the Fed hiked, what was that, in like December 2 years ago? The market, they were hiking into a deceleration in growth, and that's why the market flipped its script and completely took a nosedive. They are now hiking into a growth cycle, and that's why the market took it with stride. I had said that HYG was pulling back, and that to me would be concerning if it continued. But I also said I thought that the 200 MA area would also be a rally point, and that I didn't think we would get the full move down without the very least a bounce, which is now happening. I will say this: you've had this kind of breakdown, and you've had now 1, 2, 3, 4, 5 days worth of consolidation lower, and you're now in one day took it all back in a gap and go fashion. I'll say this: as long as it can hold the 100 MA now, I think it's okay. The path of least resistance to me would be higher. I am expecting a little bit of resistance, though, between the 50 and the 20 MA, which is coming up shortly. I think if you want to try a right or right out short, that would be your level. But if it gets through there, don't stand in the way. And if you want to play BTD, meaning buy the dip, your 100 MA is the stopping point. But again, recession, I think not. At least not yet. Let me get into some of the ones that you, ladies and gentlemen, had wanted to talk about earlier. CME was one, and I had actually, this is not one I look at very often, but it looks to me that you had a big candle day on 3-1, and actually I should have done I should do the major market indices first, but since we started CME, we'll get through it. You have a big candle on 3-1, and you kind of have a double bottom on 310 right at the 20 MA. So if you were to lose those two lows, I think you could try this thing short in size for a move at the very least down to the 50 MA, which is in the 220s, somewhere between the 220s and the 18s, 19s. As long as those lows hold and the 20 MA holds, I think you could probably look for it or stick with it as a long. AMBAC was one I had been bullish on, and I had thought it would get up to the 61.8. It did. It spent a little more time up there than I thought. It's pulled back a little bit more than I thought it might. But and we are below the gap down bar low, which was 21.02. So as long as we're below there, to me, it's still a little bit iffy. But we did hold primary trend. We do have a potential secure low set up here with a look below trend and fail, and we're above the 200 MA. I would say that you can use today's range as a gauge, long above. I don't necessarily know if short below, but I wouldn't be. I mean, you could use today's low as a stop. If you have a little bit more perspective, you could use that 1943 as a stop. There is a full gap fill at 1775. I don't necessarily know if we're going to get there. That is the low end of the consolidation range, but we stopped at the 50% fib and basically the breakout. So this has all just basically been a retest of the breakout, and I'm sort of look more into looking to buy the dip here than I am into shorting this sucker. Let's do the aforementioned S&P. I did mention that earlier, and I said that we stopped at the set range high. Again, I'm just going to use today's range. If we get back up above, the 240.32 was a poor high. That probably will get corrected if we can hold and maintain above the Fed day high, and we would make, in my view, a move even higher. I had said that the 2 times the big range could even take us up to 247s. So I'm keeping an eye on that if there's going to be some type of a blow-off scenario. With regard to IWM, it held basically where it needed to. Yesterday was a first close below trend, but there was no legs to it. And now we closed back up above the 50 MA today and stalled just at the 20. So this is going to be a key level. So above the 20 MA, I like long. Below it, to me, is just chop. Back below the 50 to me might be a short, and I'd probably add to it if we lost today's low, which is 135.97. And then I think we would articulate down probably to the 100-day MA at the very least. But as of now, we're still just chopping in range with regard to IWM. The Qs, I had said that I thought we would see the 1.618, and we're now pretty close. It was 132.71. Today was a hold of the 10-day MA, so I think you could probably hold this bad boy long as we're holding the 10 and 20 MA. If you were to lose those, then maybe the 50 MA would be in play. But that's the scoop with that. Apple, I had mentioned, was a look below and fail. I think that was in the weekend video. On 3.9, we had a look below the big candle day, which was 137.60, and we got to 137.05, held the 20 MA, and then we're back up. And I said I thought we would at least see the high of the range, and today we actually broke out of it. As far as upside targets to Apple, you know, if you do a fib extension, I mean, this thing could get up to 162, believe it or not. So I'll say this much: as long as Apple can maintain above the kind of the gap, that big day's high of day, which is like 140.15, the path of least resistance is long. If it were to lose if it were to lose today's low of day, I'd say it's probably a look below and fail. I'm sorry, a look above and fail, and then we might want to come down and retest the backside of the old up channel, and I would probably initiate short below today's low of day, and then I would look to add below 137.05. But like I said, as long as this thing holds over the 140.15, I would just have to assume that this bad boy is going higher. Let's talk about the metals quickly. GLD got a pretty big reversal bar. We held the 50, and we're now back over the 50 and the 100 MA. Probably the 20 MA might be a little bit of resistance, but I think as long as this kind of holds at least half of today's gains, it's okay. If it were to lose low of day, I think it's a short down to 112. SLV, I prefer actually over GLD because I view the SLV as having 2 important components. And one of them is obvious and one of them isn't. The first one is that it is economically sensitive because silver is used in industrial production, and if we have a growth cycle here, that picks up demand for silver. The second one, and maybe the least obvious, but the most obvious to me, is that it's the poor man's gold, and when you have retail starting to chase these, they can't afford gold and they pile into silver, and then you kind of get levered momentum higher. This stopped just short of the 61.8, but we only got some partial fills in this. I had talked about 16 being an entry, and then 15.87, and then 15.42, which are the fibs, but it just ripped up. We're just below the 50 MA. It really needs to clear back up above it, in my view, to truly firm, but I think that today's price action is a little bit encouraging, and as long as it's kind of going to hold the 100 MA now, then I'm all right. If it loses it, then it gets a wee bit more sketchy. The GDX. So this basically got the 61.8. It had a bit of a look below and fail. It bounced up to the 50% fib, then came back down, and I think a lot of people got the shake and bake out of that. But I think as long as we're above that day's high of day, which is the 2219, I'm kind of cool with it as a long. Below that, to me, would get a lot more iffy. Goldman Sachs. So I've been saying for a while, I thought that this that we could have a sell the news event with regard to the Fed, and it looks like that's the case. You basically have a double low, today's low and yesterday's low in Goldman Sachs. The 50 MA is right below. If you're looking for an entry for a quick trade, you probably could use a short below today's low or yesterday's low, whichever you want to use. They're basically identical, and that would take you at the very least down to the 50, and maybe you'd get a move down even as much as to 235s, which is sort of an important range low. Above today's high, which is a confluence of the 10 and the 20 MA, I think it would go higher, probably back up to the old all-time high. So keep that in mind. Someone had asked me about this CF Corp. CF has a decent yield, and I'm sort of looking to buy this. I was hoping for a move closer to the 200 MA and the 61.8, which is basically around 27. So I think you could use this also as a double low here. So below the low, you could probably play a quick right or right out short for that move down to the 200 or down to the 61.8. I mean, this could really go all the way down to trend, which is close into the 24s, which is the 78.6. But I'm thinking I'll probably start selling out of the money puts somewhere between the 200 and the 61.8. If it gets above today's high, you really need to, the 10-day has really been where it's stopped, so either I want it lower or above the 10-day MA for the momentum play. Someone asked also about this Twilio. The Twilio, I had played this long. I almost got stopped out of this sucker. It had the breakout day on 313, then and basically it closed below the 100 yesterday. The top was the 100 MA, and then it just came coming down. So I said to myself, do I believe the move down or I believe the move up? And I didn't really have a great answer to it. I had actually added to the trade up over on the breakout, and I was starting to get a little bit upset. But I said I'll give it to the 50 MA and I'll see if it holds, and it bounced pretty hard. So today's low of day to me is the must hold. If it were to lose today's low of day, I would stop out and probably reverse the trade short for a much deeper pullback. Over the high of day though, if we can clear the 100 MA, I might actually add to the trade again. So it's either a full stop below the low or adding above the 100 MA. Tesla got they finally did the capital raise. I believe Elon Musk is buying on the deal. I'll keep it simple, stupid with this one. Anything above 265 puts the all-time high and potentially a new all-time high in play up to potentially 306s. Below 265 to me, though, it's still iffy, and we'll keep it simple, stupid like that. Anyhow, I'm glad we powered through this one pretty quickly. I'm going to leave it there since this is a second broadcast. If you missed me, or if you want to see this again, it will be rebroadcast. Hopefully it'll save this time. And if not, I will see you on the flip side on Sunday for the weekend review video. Anyway, have a great weekend. Please make some comments. I recorded this actually on the mobile app for YouTube. I'm hoping the software is a little bit better on this time. Please let me know if what you think. Anyhow, have a great week, and cheers.